and good afternoon, everyone. Good afternoon, people here, and good afternoon, or good morning, or whatever time you are, people who watch online. Famously, Steve Jobs said about innovation. He said, innovation is ability to see change as opportunity, not as a threat. And I like this very much because this is about ability to see. And in our current world where it's open and we can observe and see anyone and everyone, and we can learn from each other very openly, and we can steal from each other very openly, there is abundance of tools and techniques and processes and approaches and ideas. So you can innovate and change and create like never before. But the question arises, where to innovate, which direction to take, where to apply those tools and techniques, which ideas to steal. And that question is being faced by many organizations and many people in society in general. I want today to look into exactly this topic and try to give my perspective how I would break down the directions where this innovation needs to be applied in banking to make individual organizations better, industry thriving, and society living better as a whole. But before I start, I want to put things in perspective. So we had really, really difficult 18 months. That we went through a lot, right? And it's still not over, but we are very, very hopeful. But another thing which is important is that during those 18 months, we as industry, as data and analytics and digital industry, went a significant breakthrough. Suddenly, the whole society, everybody bought in. And that's actually already paying off. The profits are back. The economy is trying to going up, and all of good things and good signals are actually picking up. But what actually future holds for banks? The short answer is we don't know. We don't know what will come next. Maybe it's a new variant, and then we are locked down for another years. Maybe it's a cyber threats or cybersecurity threats. And banks are facing a lot of, competition from fintechs who actually disrupt banks, line by line, right? To big techs who see banking and financial services as just another line in their great portfolio they serve their consumers. So in this chaos, and then there are probably a lot of unknown threats we can't even dream of, right? So in this chaos, there is a clear demand to still be connected with consumers, because there are so many players who try to steal consumers from you. So you have to be relevant and stay connected. At the same time, you need to be flexible and nimble, right? You need to adapt, because you don't know what will come next. And also, there is a demand to stay long-term focused and to have a North Star, which is how you want to operate in the longer term, still having direction. So with that in mind, I actually broke it down into 3 pieces in a very simple three pieces. And this is about leading customer experience, and I would say digital customer experience and omnichannel customer experience. It is about agility driven by digital, and it is about resilience and sustainability. And I actually picked. That was quite a quest for me to choose good examples from our customers to these pillars, because there are so many. So it was actually at the end my call. The team helped me to prioritize, but at the end I chose those, and I will explain what I mean by that. But before I actually go to Lloyds Bank, I want to probably give a little bit of example with something we all know, like Apple. Think of Apple. The number one KPI they use internally is customer engagement. It's all about customer engagement. It's about what you do with your device. It's about what you do when you enter the retail store. It's about how you use applications. It's about what problems you have. It's about what is your experience when you call to Apple Care, about what you download, what you deinstall, about everything. And then the data from raw material into production data, into application data, and into customer value data, this is all played in orchestra for them to actually optimize customer engagement. There are trillions of interactions, more or less every month on the data platforms at Apple, and of course it is a big focus from their side. So when we go to Lloyds Bank, I like this. I chose Lloyds Bank for two reasons. Actually, a few reasons. Number one, it's a bank. We talk about banks here. Number two, it's an old bank. It has been established in 18th century. And yet, with this history, they are actually on a cutting edge of this journey with optimizing their estate, the technology estate, and actually breaking silos and actually providing this unified customer experience across the channels. And when I was looking in details, I thought, if these guys who are around for more than 200 years, if they can break the silos, if they can solve this problem, the problem is not new, right? We all know that it's better to look at customer 360 degrees. We all know that we better know what customer does in website and then he enters the branch. We all want all of this. But actually not many organizations do this. And if these guys did it, I thought, what is the excuse actually for all of us to not do this one? The thing is here, I think there is a little bit of excuse, or rather the trend, because the problem does not become simpler. It actually becomes more complex. More channels, more interactions, more people, more interaction between each other, more opinions, more insights we want to take, right? More completed picture we want to have, and all of this. But I like this example of Lloyds Bank because they build this platform for the future, right? So it's both governance, it's process, it's also a platform. If I go to the next pillar of mine and I talk about agility driven by digital, I also picked this. I was also, not an easy choice, but I chose Unilever. It is a younger company. Yes, it is not from 18th century. It is from 19th century, but still a big and successful company. I like this particular example because a simple step, and I'm not saying easy step, but I'm saying simple step of Unilever to go from on-prem vault, a very technological decision, right, or like IT decision, if I will, to go from on-prem vault into a cloud vault, created so much energy for them internally, changed so much the mindset, so that it is actually a different paradigm and really a different mindset inside the company. So what they actually did, and they actually took exactly the data platform which was hosted on-prem, and they just now host it in a public cloud. What it gives them, and if I quote them or rephrase how they what they say is that they actually are able now to experiment more, to fail more, because there is flexibility, exactly the agility we talk about, so that you can try some of the use case. If you don't like it, you just switch it off, right? You just try another one. You try another one. You make it a little bit more spread in your organization. And of course, it does continue to serve all the typical suspects we have as use cases for our data platforms, like reporting and all of this, and predictive analytics, et cetera, and serving thousands of users across the company. But it actually adds this flexibility and mindset, new mindset layer on top. I like this because just a simple technological change changed the mentality. Now they dream of something even bigger, right? Now they talk about how we can instill insights into every transaction we have, how we can add how we can add a propensity model into every sale we have with our distributors. How we actually know how customers are using our products. So there is a lot of smaller projects around the company which are now enabled by this. I call it simple change. I didn't call it easy, just to correct. If I go into the third pillar, this one is broad. It is about this long-term aspect. We did talk about resiliency. I call it operational resiliency. Something Unilever and companies who went into this journey actually get in when they have this flexibility as well. But here I want to talk about DHL example and its steps in a sustainability journey. There is a simple carbon calculator which was built. And again, I call it simple. It's not exactly easy. Simple because you get it as a customer. You see how much impact your particular parcel makes or your particular shipment makes on the environment. And what I like about this is that they also give a choice. They also give a choice that, I want my shipment from A to B, but if I go the fastest route, I have this impact. But if I choose to do a different route, it can have a different impact. And you as a customer choose this one. I like this simplicity because it gives a control to the customer, but it hides complexity. Because what's going on in the background? They actually take all the data about all possible routes, about shipment characteristics like volume and weight and sizes and all of this, and some other characteristics as well, and they apply it to the millions of calculations for every shipment. So something which is as simple for consumer as just a choice is shown, and it hides the complexity and many calculations. So it actually shows us that at the end of the day, there is a still same paradigm where we take a lot of data, different data, we integrate or kind of combine it, and then we make these insights. It's still here. This is the essence of what we've been doing all those years. What I argue is that there is more and more need for this, what we call orchestration, between different areas, different functions, different entities, different product lines, etc. And it actually becomes even more complex. This is the example of like few elements if you add sustainability, like I showed example of DHL into the mix. when you try to do it on a granular level, it actually, the volumes of data, the number of users, the number of queries, if I use this word, number of interactions, grows not just percentage-wise, it grows 10x or 100x. So our world will not become simpler. It will become more complex because there will be much more data, much more users, much more interactions, much more AI systems and bots and everything who actually, and models who actually work here. So that's why the need for this unified orchestration is here. And to summarize on a final slide, and probably to answer the question, why this guy is talking about all of this, right? What I see is that, number one, innovation is possible in any direction. There are so many tools and techniques and options and ideas you can adopt and or steal. You have to choose where to apply your energy, and I would be happy to dispute or discuss if those pillars I suggested are right. But there must be some guiding principles of where I put my energy and where I do innovate. Does it align with this or not? I would argue you need to be connected with customer. You need to not lose this connection, because this is the key of everybody's business. You have to be agile and nimble, I call it, and flexible, right? And there is a lot of good tools how to do it. We talked about Unilever example. You also need to think long term. How you do not break long term? How do you not break your industry or society or earth? If I put this into equation as well. All of this drives complexity. All of this drives volumes and numbers, and it actually requires a platform which will help to cope with this one. And this is why we are at Teradata so excited to be this industry, because we are really, and I personally believe in the future and believe that this is absolutely bright for us. So with that, I invite you all to this journey into this bright future. Thank you.